Good morning, traders. Thanks for joining me here. It is 8:01 a.m. Chicago time on Monday, the 10th of October, 2022. Let's start first and foremost with a mic check. Let me know if I'm running hot, too low. I don't think I'm running low, but I don't want to run too hot. Blow out your speakers, scare your little dog or whatever. This is episode number 2332. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I want to remind you again of this event that's taking place today at 1 p.m. Eastern U.S. time. Today at 1 p.m. This is a live event that will be streamed on YouTube. No registration required. Just to go to the link, my edge, myed.ge forward hit dash or dash miss, all lowercase. That'll drop you into a YouTube page. Be sure to set notifications and of course subscribe to that YouTube channel. And we'll be on at 1 p.m. to talk about a pretty cool program that we're starting with EdgeClear here for charity, and we'll go over the details there. So let's get back to business here. Today, first and foremost, U.S. Bank and Treasury holiday. Bank and Treasury holiday. So those markets are closed. Volume is actually pretty good given that the treasuries are closed. The market posture is mixed this morning, and overall, no earnings to speak of yet. The main event that brings an additional risk overhang for the market is, of course, as you probably have seen from the YouTube or social media posts, that bridge that connects Crimea with mainland China was blown up. Russia's calling it a terrorist attack, but I see a lot of hypocrisy in that they're at war, and when you do stuff when you're at war, it's not really terrorism. And of course, eloquently, the Russians respond by sending missiles into populated areas of Kyiv. As a retaliation. So what's important here is the escalating risk, the fact that this is likely to bring Europe more into this war. But we'll see. China shows continued lack of consumer spending. We've got China, who is on holiday, but spending was very poor because of the lockdowns that continue. And so did I say China? No, it's Crimea is connected to mainland Russia, not China. That's I misspoke. Yeah, I'm processing too many things at the same time as I'm talking. So the consumer spending during the holidays is expected to be lackluster. There's an uptick in COVID cases in China, which might create an even more constrained trade environment, which is an additional risk overhang. Really, but that's it. This week, we've got several numbers out of Australia. Tomorrow, we have the Great Britain. Great Britain's got a claimant count unemployment rate. We get GDP out of Great Britain on Wednesday, PPI out of the U.S., FOMC minutes. That's all on Wednesday. So GDP out of Great Britain, PPI out of the U.S., and the FOMC minutes on Wednesday. Those have been moving the markets once people look into what the meeting minutes were. And then Thursday's the big day. Thursday, we get U.S. inflation, a print at or above 10%. Will send this market even lower, most likely. We also get the inflation rate that evening from China, evening my time, from China, and balanced trade out of China as well. And then on Friday, we get retail sales and the prelim Michigan's consumer sentiment and the start of earnings on Friday. So those are the main events to pay attention to. This morning, we have several Fed speakers. We've got ECB's Lane right now, Fed's Evans. We're getting Brainerd. later on, and you could see in front of you what's going on there. Note that the rotations have changed. They've actually gone down for some of these products. The S&P, for example, has gone down from 9 to 8.5 in terms of how wide a rotation can be before it's considered not normal. The Russell's gone down just one tick, and I think the Dow went up, and crude has gone down. Crude in a rally, of course, the volatility is likely to drop in there. Balance is the condition in the S&P. We've been in balance. We just had a breakout to the upside. The market is responsive up. The inventory is 80% short so far, with 48 and a quarter points of range, all within what we would consider to be normal. You notice none of the boxes are blue or orange. And so overall, we do have a relatively active Monday, but it's still within what we would consider to be quite normal. We're back. The S&P is pushing back towards that 3670, 3675 area. Very key test up here in the 3670, 71. We need to pay attention to that on the open. That's the first test that I'm looking to see how the S&P behaves. Let's move on. I don't like and want to spend much time on the overview. I would rather look at the technicals. Also, those of you who will attend today's live cast at 1 p.m., again, the invitation for that is pinned to your live chat in YouTube. If you're on Twitter, you can find it on twitter.com/real-edgeclear. And those of you who will attend will get some details about an activity which I would like to engage you in starting tomorrow. And that's a surprise. That will be the special announcement from today. There's something that we'll be doing together every morning. So the Trader Bite needs to be compressed down to 15 minutes so we can spend 5 minutes or so on this activity on Tuesdays and Thursdays. So for now, what we're doing is we're moving back to the key initial resistance this morning. Yes, 1 p.m. Eastern U.S. time. We standardized to New York, even though the exchange is here. But we're moving right back to the 70-71 area in the S&P. We have explored below Friday's low. Friday's low looked like an excess, actually. Friday's low looked like a probe and a bounce, and it had a pretty healthy pop to finish Friday right on top of the point of control, which looked like it actually had found some buying interest. However, it occurred near the close on Friday or at the end of the day, and so we can't rely on it. But overall, the overnight session gapped down, tested below, and now we're holding into Friday's range and moving into this low volume node. So Friday, we ended up with a multi-distribution profile, but really a double distribution profile with the LVN, a key low volume node, right in that 70-71, which is where we're trading now. So it's really important to see how the market treats us on the open. It will likely be an immediate line in the sand, and so that's where we stand this morning. So this is where we are now. If you look at this chart, you'll see that we are pushing up against the swing low for the year, and we've made a nice little pop here, and we had a nice pullback for a continuation. So what we did is we put in a low in the overnight session, then we had what is an impulsive move up. So we had a nice bounce up in what is really a bear market, and then we had a bit of a pullback and a nice continuation. So there we took out the high, the prior high, and we had a continuation move. Then we pulled back, put in a failure pattern, lower high, and then take out the low of the failure day. This is quite bearish, as I talked about last week. So we fell back through the 3750. And so it's very likely to test, as we talked about last week, 3650, and then to start moving towards the low. It doesn't look like we're done here on the sell side, in my opinion. So we'll see how this all works out. Okay. Let's take a look at the bigger picture. Here's the bigger picture. We've got this really odd gap up and gap through. So what we've done is we gapped up and we gapped down below this zone here that we refuse to trade. At first, that zone went up to about 37.50, 37.48. Then we partially filled it down to about 35, 33, and then we gapped back through the high here. You remember me talking about it from last week at 37.12. And what we did is we gapped up, traded, and gapped down. And those 3 days you see there, sorry, I'm losing my voice. Those 3 days you see there, that balance is so important now, because if we break above, if we happen to run to the middle here and we start to break above, this is likely to be a pretty monster push against the shorts all the way back to 39.50 through 38.50, back to 39.50, and so on. It starts us back on a trip to 4,000. So I'm watching these as the last remnants or artifacts of a balanced auction. So on this chart here, let's enlarge this. On this chart here, these 2 days were compressed together. Then we added a third day. So let's add this. Let's merge this to the left. And so you could see that there's just an incredibly balanced trade there, on top of what was a single day, a single kind of island day that gapped down. And now we have this pretty hefty balance. And then after the non-farm payrolls release on Friday, we ended up opening and driving lower to finish back in this balance. So I talked about this, that if we start to push lower and we give up the value high of that lower distribution, we're very likely to test this 36.96 area. And if the 36.96 does not bring in buyers, as if it is value and a good base and a good foundation for a rally, a sustained rally, then it's likely to go back and test what? What did I say is likely the next test down? Let's see if you were listening, and if you're listening now, what would be the next test area if we move into a balanced profile? If we're above a balanced profile and we come in, test the value high, and we don't bounce, sustain a bounce higher and remain higher, and we fall back in, naturally, the next most important test is the point of control. That is the most valuable price in the region. If we move to the point of control and we don't bounce, don't find buyers, remember, we're moving down to find buyers. That's all. If we don't find buyers there, then what happens? The answer is, as Nicholas says, value low. Look at where value low is. It is basically Friday's low. It's basically Friday's low of this composite. The value low is around 36.38. 36.38. Friday's low around 36.32. 50, I think. So we pushed through that by about 3.5 points, and then we bounced immediately back up, and we closed in the value area. So this morning we want to see, are they going to stay within the value area of this composite, or do we give up Friday's low? If we give up Friday's low, we're really targeting that low. There's not much protection left, and the sellers are likely to squeeze down into the 35.70 or so from here. That's how the auction works. It is testing. Do you want to buy here? No? Okay, let's buy down here. No, you don't want to buy down here. It's not cheap enough. Okay, let's move price down here and see if you want to buy. Oh, you bought. Okay, now that you bought, let's go back and test where the most buyers and sellers interacted. That's the point of control or a high volume node. Oh, there's still buying interest. Let's check value high and see if sellers will come in at that point where advertising price is higher. Let's see if sellers will come in. Sellers came in. Okay, then let's go back to the point of control, and we're likely to hang out there and balance until new information comes in that tells the higher time frame that this balance price is no longer valid and it should be higher or lower. And what's driving that right now is interest rates, which the unemployment number put at higher risk. And then what's likely to drive it is pretty lackluster earnings starting this Friday. So we're this 35.71 low is really vulnerable at the moment, but it's all contingent upon holding Friday's low. Friday's low is important right now. So that's my point. So that's the narrative. There's not much else for me to cover other than to say that this morning the delta overall shows large lots above the zero line. Even though we've been holding kind of steady imbalance, we've pushed up and we're holding. Oh, hold on. Yeah, okay, that looked unfamiliar to me. Very large lots holding above the zero line, short, small lots just above the zero line, really balanced, and large lots below. This move here was really with a few large lot sweeps. If you look at the tape, you'll notice that there are some pretty big moves that occurred. In fact, let me show you that. See that right here, this break? This break from down here has pretty big blue dots. Then the secondary break had some pretty big blue dots to push higher. The tape, you could see there are some dark blue bands. Pretty active large lot, but overall the relative delta or the cumulative delta is relatively flat and is on top of the small lots with the large lots underneath. So there's a disconnect or a conflict between or among the three categories that we break the cumulative delta in. This speaks of a very likely choppy open. The run-up was driven by very large lots, which generally are just sideways. They generally don't do much in the overnight session. It's a lot of volume. It's 100 contracts or higher. It's a lot of volume in a thinner Globex market. But the large lots have been down all morning. The relative delta, cumulative delta has been down all morning until these very large lots pushed up. And now that they're done, the cumulative delta is moving lower again. To me, this speaks of a pretty messed up position to be in on the open. Again, watch that 36.70, 71 this morning. Let's look at what's expected for today. Come on, come on, come on. Let's shut this off. So here's what it's done overnight. Overnight, completely balanced. Very choppy open, drops, tests below. And you could see there's a taper in the volume there. There's no interest down. It rechecks that low, comes right back to the point of control, and then we just recently broke. And again, you see these very large lots coming in here to lift as if it's on a news basis. But let's look at what's expected for today here. Come on, buddy. I seem to be pulling in. I'm pulling in so much data. This thing is having to reload. It's time for an upgraded PC here. So we've broken higher. We're holding here. The main line in the sand, as I've mentioned, 71. Watch this 71. I'm expecting this to respond to the downside. I'm expecting an internal gap to settle trade early on. I'm looking for the market to move back to 36.53 and a quarter to tag settlement and to tag the point of control. I'm looking for it to try to squeeze through into this crowded area down here. It is likely to test all the way down into 45, but I'm looking for that early on. I'm looking for a short into this 53 quarter. 53 quarter settle, hold steady, bounce, consolidate, and then squeeze. But overall, I don't expect it to move very far this morning. This is the Monday after non-farm payrolls. The news flow overnight has not been all that dramatic. I'm sure the people from Crimea and Kyiv would disagree, but overall for the markets, it's not all that dramatic. The alternative is an open auction this morning that squeezes higher, makes an attempt or makes a run towards the 36.80 or so, and then is confronted with selling up here, comes back in, comes back to the open, moves back to the to settlement and holds steady. Okay, these are the two main expectations. Will they drive below Friday's low today? Unlikely. The probability is relatively low, but it's still there. I'm expecting the overnight high to go. The probability of an overnight high and an overnight low is reduced. And overall, I expect that the settlement from Friday at 36.50 or so to be to provide some support. I expect this to be somewhat of an inside day. If we give up Friday's low, then the move, that's scenario 3, the move down will likely be quite fast towards the 3600 and the 3596. Okay, that would be the target, would be down here to the downside. Those are the two key scenarios, or 3. I didn't draw the third, but you can see what that is. One thing you should, again, I want to remind you that today at 1 o'clock, we're having an event called Hit or Miss. We'll be talking about event contracts, and there's a lot of controversy around these, so there are gonna be a lot of questions that people have, and that I will answer why I'm excited by these and what we're planning to do to have some engagement and also help us fulfill a very specific purpose with these products. Good luck, and I'll catch you at 1 o'clock Eastern today. Take care.